Hey, so welcome back. Crypto Leverage Trading Group Part 2 here, Tuesday morning. We're talking averaging, okay? Simple techniques that you can use, simplified, okay? And so averaging was, we talked about how the percentage of 46% of people out of the money, in the money right now, Bitcoin 47% out of the money, 7% at the money. And what you can do averaging or dollar costing if you're on spot in terms of lowering your average cost per token. You can do the same exact thing on many of your leverage exchanges where, as I said in the previous video, you could have entered at 33,000, you could have entered at 32,000, you could have entered at 31,000, and Bitcoin kept going down, 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 okay? From 34 yesterday, down, 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 down. And you're trying to time the bottom, okay? People love to talk about that all the time on Twitter, okay? If that's your shtick, that's your shtick, okay? But it kept going lower until we touched about a little less than 30,000. Personally, for me, 30,668. I can show you here on the bottom here. Last trade entry on Bex for call for Bex Plus. Okay. And a lot of that just because I was eating dinner and wasn't really paying attention. I'm sure there were other opportunities. Below the 31,400 level, which is the next level, 7-day moving average. So everything that happened yesterday, the 7-day moving average is still 31,476 on Bex Plus. Check your exchange because it could be different. And we're now trading right near that level. And we know what's going to happen when we break this 31,400 channel. We're going to test the 21-day, which is 33,000. See that? That's a wide gap. And that's the part that people miss. When you come down so fast, you're going to go back up when the market turns. You're going to reverse. And the reason why is a gap gets filled. Okay? A gap gets opened up and traders will fill that gap. So once we bottomed out and now people are back in the market buying again, they're going to drive it to the 7-day moving average. Once it breaks its 7-day moving average, a lot of that whole fear thing and a lot of that up starts to subside a little bit. And people are like, oh, okay. The market's stabilizing here. We're going to get back in. And then they ride that price back up. Look at this gap here, mates. 31,000, 33,000. The market is going to fill that gap. Does that mean we're going to test and break 33 in the next day? No. It just means the technicals now, if we can hold above the 7-day today, that's the next logical step up before there's any headway, okay? And a lot of times it gets filled, and that's where you want to play your trade. So averaging down, buying at 33, buying at 32, buying at 31, buying at 30, you averaged your Bitcoin average token price to where now the market is going to take it back above your average, okay? And you can do that with leverage trading, adjusting your leverage amount, okay? So at that 32,000, which was a major breakpoint, okay, support on the IOMAP, trade entry call at 10x. Well, it broke. It didn't hold. It didn't support. And that happens. Doesn't happen a lot, but it happened, okay? We went back down to 30. We could have gone to 28 because 28 was really the next solid IOMAP support bubble area, okay? 30 had some support, and that one held. So then you get back in there, okay? And so you can go from 10x to 8x to 5x to 3x, all the while extending your liquidation level on your leverage exchange to where you're not going to get liquidated. You have time to wait for the market in the next 24 to 48 hours to work itself out again, okay? When you play those games, okay, that war on the minute chart stuff, and you want to like 50x, you have a very, very, very small window for liquidation, okay? And on days like yesterday, you're talking $6 billion got liquidated, okay? Liquidated because of junk like that. People trying to play the bottom, trying to trade the swing. No, play the